right. So uh, you sent over a really interesting set of documents on
Mm-hmm.
the European Innovation Council Fund,
Okay.
specifically their investment guidelines for Horizon Europe,
Okay.
updated as of December 2023.
Right.
It's not every day we get to peek behind the curtain of a
Yeah.
publicly funded entity that acts like a venture capitalist, is it?
Indeed, the ELC fund is quite a unique beast.
Yeah.
It's a blend of grant funding and direct equity investments,
Right.
all geared toward helping promising European startups and
Okay.
SMEs scale up their innovations.
So it's not just about handing out cash, it's
Right.
about strategically nurturing these companies,
Yeah.
especially those developing groundbreaking technologies and disruptive innovations. What I find particularly interesting is this concept of deep tech
Okay.
that they emphasize.
Right.
What exactly does that mean?
Deep tech goes beyond your typical high-tech company.
Okay.
The EIC fund is looking for companies developing technologies based on significant scientific advancements, pushing the boundaries of what's possible. Think cutting-edge advancements in fields like artificial intelligence,
Right.
biotechnology, or quantum computing,
Right.
rather than just incremental improvements to existing technologies.
So it's about supporting those ventures that are truly pushing the envelope.
Yeah.
And of course, they're laser focused on ensuring that the benefits of these innovations are reaped by Europe.
Absolutely. The guidelines clearly state that only companies based in EU member states or associated countries
Right.
are eligible for funding.
Yeah.
The EU is investing in these companies,
Uh-huh.
so they want to make sure the value created,
Right.
including intellectual property,
Right.
stays within Europe and contributes to its economic growth.
That makes sense.
Yeah.
But within Europe,
No.
are there specific sectors they favor?
While the fund is open to a variety of sectors,
Okay.
they do mention a preference for capital-intensive strategic technologies,
Okay.
particularly those that may not be covered by InvestEU. Think areas like aerospace,
Right.
semiconductors, or advanced materials.
Yeah.
It seems they're trying to fill a specific gap in the funding landscape,
Right.
focusing on areas crucial for Europe's future competitiveness.
Okay, so they're strategic about where they place their bets.
Yeah,
And it's not just about economic growth either.
right.
The guidelines also stress the importance of ethics, outlining industries the fund won't touch.
That's right.
So what kind of activities are we talking about here?
Annex 2 of the guidelines provides some examples.
Okay.
Companies involved in harmful labor practices,
Right.
unsustainable fishing,
Okay.
or activities that violate human rights are strictly off the table.
Okay, so
It's clear they want their investments to align with broader European values.
so ethics are a major consideration. Now let's talk numbers.
Okay.
How much does the EIC fund typically invest in a company?
Their investments range from 500,000 to 15,000 euro
Okay.
per company.
Okay.
What's interesting is this range
Yeah.
allows them to support companies at various stages,
Right.
from early stage startups needing a smaller initial boost
Okay.
to more established SMEs seeking significant growth capital.
That makes sense.
Yeah.
A one-size-fits-all approach wouldn't work in this landscape.
No.
And they're not just writing checks, right?
Exactly.
They use different financial instruments depending on the situation.
They can invest through direct equity,
Go up.
taking a stake in the company,
Uh,
or through quasi-equity instruments like convertible loans,
okay.
which act as a hybrid between debt and equity.
Okay.
In simpler terms,
Yeah.
it's like a loan that can convert into ownership
Okay.
if the company hits certain milestones.
So they have some flexibility in how they structure the deal.
Right,
And they seem to be big on co-investment.
right.
They're not looking to go it alone.
The EIC fund often seeks at least a 1.1 match from other investors,
Okay.
aiming for a 1.3 leverage effect over time.
Okay.
In essence, they want to attract 3 times their initial investment from other sources.
So they're using their funds to catalyze further investment,
Yeah.
making their money work harder.
Right.
But why is co-investment so important to them?
Co-investors bring more than just money to the table.
Okay.
They bring expertise,
Uh-huh.
networks, and strategic value
Okay.
that can help these startups succeed.
Okay. Good.
Think of it as building an ecosystem of support around these companies,
Okay.
not just providing a financial injection.
I see.
Yeah.
So they're carefully choosing their dance partners,
Uh-huh.
looking for investors who can contribute beyond just capital.
Yeah.
And speaking of carefully choosing, they have this interesting system of categorizing potential investments.
Okay.
They call them buckets, right?
Yes. The bucket system is a clever way to assess
Okay.
and categorize companies based on their investment readiness
Right.
and the level of private investor interest they're attracting. It's like sorting them into different leagues based on their current stage and potential.
Okay, I'm intrigued.
Okay.
Walk me through these buckets.
Let's start with bucket 0.
Okay.
This is where companies land if red flags are discovered during due diligence,
Okay.
preventing investment altogether.
Okay.
These could be issues with the company's financials,
Right.
legal compliance, or the technology itself.
So it's the no-go zone.
Yes.
What about bucket 1?
Bucket 1 is for companies that aren't quite ready for prime time,
Okay.
meaning traditional investors might not find them attractive yet.
Okay.
These could be companies at a very early stage of development with a long time to market,
Right.
or requiring more nurturing from the EIC fund.
So they're the ones with potential,
Yeah,
but need a bit more hand-holding before they're ready to attract the big bucks.
exactly.
Okay, that makes sense.
Yeah.
What about bucket 2?
Bucket 2 is for companies that are starting to generate buzz in the investment world, attracting interest from qualified investors.
Okay.
These are investors with demonstrable know-how
All right.
in the relevant market,
Mm-hmm.
technology, and legal landscape,
Right.
adding strategic value beyond just capital.
So there's some market validation,
Yeah,
but they still might need a little nudge from the EIC fund to get over the finish line.
precisely. And in these cases,
Okay.
the EIC fund typically looks for their investment to be at least matched by
Okay.
these private investors.
Okay.
They're looking for strong signals
Right.
that the private sector believes in the company's potential.
All right, so that's bucket 2.
Yeah.
Now the final one, bucket 3.
Okay.
What's that all about?
Bucket 3 is the Premier League.
Okay.
These are the companies that are already attracting significant investor interest.
Uh-huh.
They might even be publicly listed companies.
Okay, so why would the EIC fund even bother with these companies
Yeah.
if they're already investor magnets?
It's strategic, even if a company is swimming in funding. The EIC fund might co-invest to secure a blocking minority stake.
A blocking minority stake.
Yeah.
What exactly does that mean?
It means they hold enough shares
Okay.
to prevent major decisions from being made without their consent.
Okay.
It's a way to ensure that European interests are protected,
Right.
especially in strategically important sectors,
Uh-huh.
even if the company is attracting investments from outside Europe.
That's a powerful tool.
Yeah.
So they're using their investment to maintain some control and influence, ensuring that Europe benefits from the company's success. It's a fascinating approach, isn't it?
It is.
They're really thinking strategically about how to use their resources to maximize their impact on European innovation.
Absolutely. It's clear they're not just throwing money at any promising company.
Yeah.
They have a well-defined process.
Right.
They're thinking long-term,
Yeah.
and they're committed to protecting European interests.
Okay, so now I'm really curious about this due diligence process they put companies through. We've touched on it, but what exactly does it involve?
Okay.
What are they looking for when evaluating a potential investment?
The EIC fund's due diligence is incredibly thorough.
Okay,
It goes beyond the initial screening done by the ISMEA,
right.
the European Innovation Council and SME's executive agency.
Okay.
They dig deep into every aspect of the company.
So it's more than just checking financials and market projections.
Yeah.
What are some of the key areas they focus on?
They scrutinize the management team,
Okay,
looking for experience,
Right.
expertise, and vision.
okay,
They delve into the business strategy,
right.
assessing its soundness,
Okay,
scalability, and path to profitability.
right.
They also carefully evaluate the market potential,
Okay.
looking for real demand,
Uh-huh.
a sizable market,
Right.
and manageable barriers to entry.
Okay, so it's not just about having a cool technology.
Right.
It's about having a viable business.
Yeah.
What about the technology itself?
Of course, that's a major focus.
Yeah.
They assess the technology's feasibility, scalability, and its potential to disrupt the market.
Right.
They also look at the intellectual property portfolio,
Right.
making sure it's strong and well protected.
So they're not just taking the company's word for it. They're
Yeah.
doing their own homework.
Right.
And all of this happens before they decide whether to invest.
Yes, and even before they categorize the company into one of those buckets we discussed,
Right.
they want a complete picture before making any decisions.
It sounds like they're really trying to mitigate risk and
Yeah.
ensure they're making smart investments.
Yeah.
But what happens if they uncover something problematic during this due diligence?
Uh-huh.
I mean, are there any consequences?
Absolutely. If they find serious issues like fraud,
Okay.
misrepresentation, or non-compliance with EU regulations,
Right.
the application is rejected.
Wow.
And in some cases,
Right.
even if a grant agreement has been signed,
Uh-huh.
it can be terminated.
Wow. So they're serious about maintaining the integrity of their investments.
Yeah.
Now, we talked about intellectual property briefly,
Huh.
but I'm curious to learn more about how they approach this.
Okay.
It seems like a tricky area,
Yeah.
especially when balancing a company's autonomy with the EIC Fund's mission of supporting European innovation.
It is a balancing act
Right.
in most cases.
Yeah.
They give companies considerable freedom in managing their intellectual property,
Okay.
recognizing that flexibility is crucial
Right.
for attracting further investment and scaling up.
So they're not trying to be overly controlling?
No, but there's a nuance here.
Yeah.
While they generally aim to give companies freedom,
Uh-huh.
they prioritize securing European ownership of intellectual property
Right.
when strategic interests are involved.
So they want to ensure that Europe benefits from the innovations they're funding,
Yes,
even if the company operates globally.
precisely.
Okay, that makes sense.
Yeah.
So we've covered a lot of ground here.
Uh-huh.
The investment criteria,
Yeah.
the due diligence process, the intellectual property considerations.
Uh-huh.
I'm curious about the long game.
Okay.
What's the EIC fund's exit strategy?
Okay.
How do they plan to eventually recoup their investments and hopefully generate a return?
The EIC fund is a patient capital investor.
Okay.
Their average investment horizon is 7 to 10 years,
Okay.
with a maximum of 15 years.
Okay.
They're not looking for quick flips. They're
Yeah.
in it for the long haul.
So they're not just chasing short-term profits.
No, their primary goal is impact,
Right.
not just financial return.
But of course, they still aim for a positive return on their investment, right?
Absolutely.
Are using public funds after all.
They have a responsibility to be financially prudent,
Right.
but their approach is more nuanced than
Okay.
simply maximizing profits.
Right.
Their focus is on sustainable long-term growth
Okay.
that benefits both the companies they invest in
Right.
and the European economy as a whole.
All right. So how do they typically exit their investments?
Okay.
What are the options on the table?
Their exit strategy is tailored to each company,
Go.
considering factors like the business plan,
Right.
the industry and market conditions.
Right.
Common exit routes include initial public offerings, IPOs,
Okay.
where the company goes public
Mm-hmm.
and lists its shares on a stock exchange,
Right.
allowing the EIC fund to sell their shares to the public.
So that's the classic going public scenario we often hear about,
Right.
particularly in the tech world.
But it's not always the best option.
Right.
Another common exit route is a trade sale,
Okay.
where the company is acquired by another company,
Okay.
often a larger player in the same industry.
So that's when a bigger fish comes along
Yeah.
and swallows up a smaller one.
Right.
And the EIC fund gets a payout based on their stake.
Exactly.
Okay.
Sometimes a management buyout, MBO, might be a possibility,
Okay.
where the company's management team buys out the existing investors,
Excellent.
including the EIC fund.
So in that scenario, the management team takes the reins
Yeah.
and becomes the sole owner of the company.
Precisely.
Okay.
And finally, in some cases,
Okay.
a secondary sale might be the best option,
Okay.
where the EIC fund sells its shares to another investor,
Right.
perhaps a private equity firm or another venture capital fund,
Okay.
rather than waiting for an IPO or a trade sale.
So they have a range of options depending on how the company performs
Right.
and what the market conditions are.
Yes, and they usually try to align their exit strategy
Okay.
with the lead investor in a particular round,
Right.
recognizing the importance of working collaboratively
Yeah.
with other investors.
Okay, so they're not acting in isolation.
No.
They're part of a larger ecosystem of investors.
Right.
Now, you mentioned earlier that the EIC fund's primary goal is impact,
Uh-huh.
not just financial return.
Right.
Can you elaborate on that?
Sure.
What kind of impact are they actually looking for?
They're looking for investments that will contribute to Europe's economic growth,
Okay.
create jobs,
Right.
and address societal challenges.
Yeah.
It's not just about lining their pockets.
Right.
It's about making a positive contribution to European society.
So it's about more than just making money.
Yeah.
It's about making a difference.
Right.
What are some specific examples of the impact they're hoping to achieve?
They're particularly interested in supporting the development of key enabling technologies,
Okay.
like artificial intelligence,
Uh-huh.
biotechnology,
Yeah.
and clean energy
Right.
areas that can have a transformative effect
Right.
on various industries.
So they're looking for companies that are pushing the boundaries of innovation.
Yeah.
And have the potential to create a better future for Europe.
Right.
But it's not just about technology, right?
No.
They're also committed to fostering diversity and inclusion in the innovation ecosystem.
Yes, that's a key part of their mission.
Okay.
They want to ensure that the benefits of innovation are shared widely and that everyone has the opportunity to contribute to Europe's technological advancement, regardless of their background.
Okay, so they're trying to create a more equitable and representative innovation landscape in Europe. It's a bold vision, but it's not without its challenges, right?
No.
What are some of the obstacles they face in achieving these goals?
One of the biggest challenges is striking that balance between a financial return and impact.
Right.
The most impactful investments are often the riskiest.
Right.
So they have to make tough decisions about where to allocate their resources.
So it's a tightrope walk between pursuing their mission and ensuring they're making financially sound investment.
Exactly.
Right.
And they also face the challenge of competing with private investors who are often more agile and have a higher risk tolerance.
So they have to be strategic in how they deploy their capital, making sure they're getting the most bang for their buck.
Absolutely. And they have to be creative in structuring their investments to attract those co-investors we talked about.
Right.
Making their funding go further.
Okay, so it's a delicate balancing act.
Yeah.
They have to be smart, strategic, and a bit creative to achieve their goals.
Right.
Now let's shift gears a bit and talk about the role of mentorship in their approach. We touched on this earlier, but I want to explore it in more detail.
Okay.
How do they use mentorship to support the companies they invest in?
They've built a network of mentors who are seasoned entrepreneurs, investors, and industry experts. People who have been there and done that, and they provide guidance and support to the companies in various areas.
So they're tapping into a wealth of experience and expertise to help these companies navigate the choppy waters of building a successful business.
Exactly. The mentors provide guidance on everything from business strategy and product development to fundraising and team building. It's a holistic approach to mentorship, covering all the key aspects of growing a company.
And it goes beyond just offering advice, right?
Yeah.
They connect the companies with their own networks, opening doors and creating opportunities.
Absolutely. The mentors help the companies navigate the challenges of scaling up, which can be a make or break moment for many startups.
Right.
And they also provide that essential emotional support, which can be crucial when facing the inevitable setbacks and stresses of the entrepreneurial journey.
So they're not just advisors.
Right.
They're also cheerleaders and confidants.
Yeah.
Providing a much-needed support system. Now, how are these mentors chosen?
Okay.
Do the companies get to handpick their own mentors?
It's more of a curated matchmaking process.
Okay.
The EIC Fund, with the company's consent, connects them with potential mentors from their network.
So they're playing matchmaker.
Yeah.
Ensuring a good fit between the company's needs and the mentor's expertise.
Exactly. And what's interesting is that these mentors are often individuals who could also be potential investors.
Ah, that's a clever approach.
Yeah.
It allows experienced investors to get involved early on, get to know the company, and potentially pave the way for future funding rounds.
Yes, it creates more collaborative and supportive ecosystem for the companies. It's not just about the money. It's about building relationships and fostering a sense of community.
Okay, we've covered a lot of ground here.
Yeah.
From the EIC Fund's investment philosophy and due diligence process to their focus on impact and their unique approach to mentorship. Now, I'm really curious about the actual mechanics of how they manage these investments. Do they have a dedicated team that works with these companies? Or do they outsource that part of the process?
The day-to-day management of the investments is handled by the external AIFM, which is Alter Domus Management Company SA.
So they're essentially outsourcing the management of the fund.
Well, it's not simply about outsourcing. It's about leveraging specialized expertise. Alter Domus is a firm with extensive experience in alternative investments. They have the knowledge and resources to handle the complex administrative and legal aspects of managing a fund like this.
So they're bringing in the specialists to handle the nuts and bolts of the operation.
Right.
But does that mean the EIC fund takes a hands-off approach?
Not at all. They work closely with the external AIFM and the European Investment Bank, EIB, which acts as an advisor to ensure that the investments are aligned with the fund's overall strategy.
So there's a lot of collaboration and oversight,
Right.
even though the day-to-day management is handled by an external firm.
Yeah.
What's the EIB's role in this?
The EIB plays a crucial role in providing guidance and expertise on investment decisions, leveraging their extensive experience in investing in innovation and supporting European businesses.
So they're bringing their deep knowledge of the European market and the challenges and opportunities faced by innovative companies to the table.
Yeah.
It sounds like a well-structured system with checks and balances in place.
Yeah.
But I'm still curious about the day-to-day interactions between the EIC fund and the companies they invest in.
Right.
How does that work in practice?
Well, in addition to the external AIFM, the EIC fund also has a dedicated team of investment officers who are responsible for monitoring the portfolio companies and providing support.
So there's a team that's actively involved.
Yeah.
In working with these companies,
even
though the fund management is outsourced.
Exactly. These investment officers act as a liaison between the fund and the companies. They attend board meetings, provide guidance on strategic decisions, and help the companies navigate the complexities of scaling up.
So they're not just sitting in an ivory tower.
No.
They're rolling up their sleeves and getting involved.
Absolutely. And they work closely with the mentors we discussed earlier, ensuring that the companies receive the support they need across all areas.
It sounds like they're creating a very comprehensive and hands-on support system for these companies.
They are, and they also have a range of resources available to the companies, such as access to networks of experts, investors, and potential partners, going beyond just financial support.
So it's about providing access to a whole ecosystem of resources and expertise to help these companies thrive. It's a very holistic approach. But what happens if a company doesn't perform as well as expected?
I
mean, investments are inherently risky, and not every venture is going to be a home run.
No.
Are there any safeguards in place to protect the EIC fund's investment?
That's a great question, and yes, there are several safeguards in place. They have a rigorous due diligence process, as we discussed, and they monitor the performance of the companies they invest in very closely. They're not just going to sit back and watch if a company starts to struggle.
So they're proactive in their approach to monitoring. What happens if a company is facing serious challenges? What are their options?
They have a few tools at their disposal. They can provide additional support, such as mentoring or connecting the company with relevant experts. They can also restructure the investment, perhaps converting a loan into equity to give the company more financial flexibility.
So they have some levers they can pull to try to get a company back on track.
Yes, and in extreme cases, they can exit the investment altogether, but that's generally a last resort, used only when it's clear that the company is not going to succeed.
So they have a range of options depending on the situation.
Yes.
But it sounds like they're committed to working with the companies to try to find solutions whenever possible.
Yes. They're not quick to pull the plug. They have a long-term perspective and are invested in the success of these companies. They're also very transparent about their investment process and their expectations for the companies they invest in.
So the companies know what they're getting into from the start. There are no surprises.
Exactly. And that helps to ensure that everyone is on the same page and working towards the same goals.
So we've covered a lot of ground here, from the EIC fund's investment philosophy to their due diligence process, their exit strategies, and the practical aspects of how they manage their investments. Now let's zoom in on a crucial step in this whole process. How do companies actually get funding from the EIC fund? What are the steps involved?
It all starts with the EIC Accelerator calls for proposals, which are essentially competitions for funding.
So it's a competitive process. Companies have to. Let's dive back into these EIC Fund Investment Guidelines. We've established that they're not just looking for any investor. They're looking for the right partners. What stands out to me is their emphasis on attracting qualified investors.
Okay.
Especially as companies move through those different buckets of investment readiness we talked about.
That's a crucial point. It's not just about bringing in any investor with deep pockets.
Right.
The EIC fund is very specific about the kind of partners they want to see involved.
Right. They define a qualified investor as someone who has demonstrable know-how.
Right.
In the relevant market technology and the legal jurisdiction, it's about strategic alignment and adding real value beyond the capital itself.
Think of it like building a dream team for a high-stakes project.
Okay.
You wouldn't just assemble a random group of people.
Right.
You'd carefully select individuals with complementary skills, experience, and a shared vision.
I like that analogy.
Yeah.
So the EIC fund is acting as a kind of talent scout. Looking for investors who can bring their expertise networks and strategic insights to the table.
Yes.
Helping these companies build a solid foundation for growth.
Precisely. And that's why the EIC fund places such a strong emphasis on co-investment.
Right.
They're looking for those strategic partners who can help guide these companies through the complexities of scaling up and bringing their innovations to market.
And the type of investor they seek and the level of co-investment they expect varies, depending on which bucket a company falls into, right?
I absolutely remember the bucket system is a dynamic process.
Right.
Companies can move between buckets as they evolve, attract investors, and achieve milestones. It's not a one-way street.
Right. So let's revisit those buckets and see how the co-investment dynamics play out.
Okay.
We talked about bucket one companies,
Right.
those that aren't quite investor ready yet.
Yeah.
Perhaps they need more time to refine their technology or business model.
Right.
How does the EIC fund approach co-investment in those cases?
For bucket one companies, the EIC fund might take a more active role.
Okay.
Not just providing funding, but also guidance, mentorship, and support in attracting other investors.
Okay.
They might even structure their investments in stages, releasing funds as the company achieves predefined milestones, reducing risk and incentivizing progress.
So it's like a carefully choreographed dance, guiding those early stage companies and preparing them for the spotlight of the investment world.
That's a great way to put it. And in these early stages, the EIC fund often utilizes what are called quasi-equity instruments, such as convertible loans.
Okay. We touched on convertible loans before, but I admit I'm still a bit hazy on the specifics. Could you break that down for me?
Of course, a convertible loan is a hybrid between debt and equity.
Right.
It starts as a loan, but it has the option to convert into equity in the company at a later date.
Okay.
Typically during a future funding round.
So it's like a loan with the potential to morph into ownership.
Exactly. And this is particularly attractive for those early stage bucket one companies.
Yeah.
It allows them to access funding without immediately giving up equity and diluting their ownership stake.
I see. It gives them some breathing room to grow and develop before bringing in other investors.
And it also gives the EIC fund some flexibility. If the company performs well and attracts other investors, they can convert the loan into equity and share in the company's success. If not, they can simply collect the interest payments like a traditional lender.
So it's a win-win situation. Providing flexibility for both the company and the EIC fund.
Right.
Now, how does this co-investment approach change when we move up to bucket two?
Okay.
Those companies that are starting to attract interest from qualified investors.
In bucket two, the EIC fund typically looks for at least a 1.1 match from those co-investors. Remember that 1.3 leverage effect they're aiming for over the entire investment cycle? They're looking to attract 3 times their initial investment from other sources.
So they're not just adding fuel to the fire, they're trying to spark a bonfire. Using their investment to catalyze further investment from the private sector.
That's a great way to visualize it. And in bucket two, they might also reserve a portion of their investment as a potential top-up for a future round, signaling their commitment to supporting the company as it scales.
It's like saying, hey, we're not just here for the initial investment. We're in it for the long haul and ready to provide additional support when you need it.
Exactly. It's a powerful way to build trust and demonstrate their long-term commitment to the company's success.
Now let's talk about bucket three.
Okay.
The companies that are already attracting significant investor interest, perhaps even publicly listed companies.
Right.
In those cases, why would the EIC fund even bother getting involved?
Yeah, it seems like these companies already have access to plenty of capital.
That's what I'm wondering.
Yeah.
What's the strategic rationale for the EIC fund to invest in these seemingly well-funded ventures?
Their involvement in Bucket 3 companies
Oh,
is often driven by a desire to secure a blocking minority stake.
we talked about that earlier, but can
Mhm.
you remind me what that means?
A blocking minority stake means they hold enough shares to prevent major decisions from being made
Sure.
without their consent.
Right.
It's a way to safeguard European interests,
Right.
particularly in strategically important sectors,
Uh-huh.
even if the company is attracting investments from outside of Europe.
So it's a way to maintain some level of control and influence,
Right.
ensuring that Europe benefits from the company's success,
Uh-huh.
even if it operates on a global scale.
Precisely. It's a strategic move
Yeah.
to
Yeah.
protect European interests and ensure that the value created by these companies
Right.
contributes to the European economy.
It's fascinating how they use these different buckets
Yeah.
to tailor their investment approach and maximize their impact across a range of companies.
Right.
But let's shift gears a bit and talk about the due diligence process.
Okay.
We touched on it before.
Yeah.
But I'm curious about the specifics.
Okay.
What are they really looking for when evaluating a potential investment?
The due diligence process is incredibly thorough.
Yeah.
It's not just about number crunching and market analysis.
Right.
They dig deep into every aspect of the company, from its leadership and strategy
Right.
to its technology and intellectual property.
So walk us through it. What are the key areas they focus on?
First and foremost, they scrutinize the management team.
Okay.
They're looking for individuals with experience, expertise, and the vision to lead the company to success.
Okay.
They're also assessing the business strategy,
Right.
making sure it sounds scalable
Right.
and has a clear path to profitability.
It's not just about having a brilliant idea.
Right.
It's about having a viable plan to turn that idea into a thriving business.
Exactly. And of course, they also carefully evaluate the market potential.
Right.
Is there a real demand for this product or service? Is the market large enough
Yeah.
to support the company's growth ambitions?
Right.
Are there any significant barriers to entry?
Right. They're making sure that there's a real opportunity
Uh-huh.
for the company to succeed in the marketplace.
Yes.
Now, what about the technology itself? I imagine that's a major part of the evaluation,
Right.
especially given their focus on deep tech.
Absolutely. They conduct a deep dive into the technology,
Okay.
assessing its feasibility, its scalability,
Right.
and its potential to disrupt the market.
Right.
They're also looking closely
Yeah.
at the company's intellectual property portfolio,
Right.
making sure it's strong and well protected.
So they're not just taking the company's word for it. They're
Abs-
doing their own independent assessment
Right.
of the technology and its potential.
Precisely. And they're also considering the legal and regulatory landscape.
Right.
Are there any potential hurdles the company needs to clear?
Okay.
Are there any compliance issues that need to be addressed?
Right.
Navigating the legal and regulatory maze,
Yeah.
it can be a major challenge for any company,
Right.
especially those in innovative or disruptive sectors.
Right. And the EIC fund wants to make sure that the companies they invest in
Yeah.
are well equipped to handle those challenges.
Uh-huh.
Now, let's talk about their long-term perspective.
Okay.
We've established that they're not looking for quick flips.
Right.
They're patient capital investors.
Uh-huh.
But what exactly does that mean in practice? How does their long-term approach shape their exit strategy and their definition of success?
They're not driven by short-term profits.
Okay.
They understand that building successful companies takes time.
Yeah.
And their investment horizon reflects that. Their average investment period is 7 to 10 years,
Yeah.
with a maximum of 15 years.
Right.
They're willing to stay the course,
Yeah.
providing support and guidance along the way.
So they're more like partners than just investors,
Uh-huh.
walking alongside these companies on their journey to growth.
That's a great way to describe it, and their exit strategy is equally nuanced.
Okay.
They don't have a one-size-fits-all approach.
Right.
They tailor their exit strategy to each company,
Yeah.
considering factors like the company's business plan,
Uh-huh.
the industry dynamics,
Right.
and the overall market conditions.
Okay, so they're not just looking for a quick cash out.
No,
They're taking a more holistic and strategic approach.
exactly.
Yeah.
And their definition of success goes beyond just financial returns. Yeah.
They're looking for investments
Yeah.
that contribute to Europe's economic growth,
Right.
create jobs,
Right.
and address societal challenges.
So,
They're aiming for a triple bottom line.
yeah.
Financial sustainability,
Right.
social impact,
Right.
and environmental responsibility.
So it's about creating a more prosperous, equitable,
Uh-huh.
and sustainable Europe
Yeah.
using innovation as a driving force.
Right.
That's an ambitious vision, but it's not without its challenges.
Yeah, right.
We talked about the delicate balancing act of financial returns and impact.
Yeah.
What are some of the other obstacles they face
Okay.
in achieving their goals?
Well, one of the key challenges is attracting and retaining top talent.
Right.
They need a team of experienced investment professionals who understand the complexities of deep tech, can identify promising companies, and can provide the necessary support to help these companies succeed.
Right. It's not just about having money to invest.
It's about having the right people with the right skills and expertise to manage those investments effectively.
Absolutely. And they also face the challenge of staying ahead of the curve in a rapidly evolving technological landscape.
Right.
Deep tech is constantly evolving. New fields are emerging.
Right.
And the pace of innovation is accelerating.
Right.
The EIC fund needs to be agile, adaptable, and constantly learning to keep up with these changes and ensure they're investing in the most promising areas.
It's like trying to hit a moving target.
Yeah.
Constantly adjusting their aim as the landscape shifts.
That's a great analogy. And they also have to navigate the complex world of regulations and policies, which can sometimes be a barrier to innovation.
Right.
Striking a balance between fostering innovation and ensuring responsible development is a constant challenge.
Okay, so they're juggling multiple priorities, balancing financial returns with impact, staying ahead of technological advancements, and navigating a complex regulatory landscape. It's a lot to manage.
It is, but I think it's important to acknowledge the ambition and the vision behind this initiative.
Right.
They're trying to do something truly innovative, something that could have a profound impact on the future of Europe.
It's an inspiring goal, and it will be fascinating to see how they continue to evolve and adapt to meet these challenges.
Absolutely.
Now let's switch gears and delve into the fascinating world of mentorship.
Okay.
A key element of the EIC Fund's approach. We talked about their network of mentors.
Right.
But I'm curious about how this mentorship actually works in practice.
Okay.
How do they connect these companies with the right mentors?
Okay.
And what kind of support do the mentors provide?
The EIC Fund has a very deliberate approach to mentorship.
Okay.
They understand that starting and scaling a company can be a lonely and challenging journey. And they want to provide these companies with the support they need to navigate those challenges.
Yeah.
They have a carefully curated network of mentors
Okay.
who are experienced entrepreneurs, investors, and industry experts, people who have been there and done that.
So they're bringing in people who have real-world experience and can offer practical guidance, not just theoretical advice.
Exactly. And they go to great lengths to match companies with mentors who have relevant expertise.
Right.
And can provide tailored support.
No, okay.
It's not a one-size-fits-all approach.
So they're playing matchmaker, trying to create the perfect pairing between company and mentor. What are some of the key areas where mentors provide support?
Mentors offer guidance on a wide range of topics. Everything from refining the business model and developing the product to navigating fundraising and building a strong team.
Right.
They also help companies develop their leadership skills, build resilience, and maintain a healthy work-life balance.
Right.
Which is often a challenge for entrepreneurs.
So it's not just about the business side of things. It's also about supporting the founder as an individual, helping them develop the skills and resilience they need to succeed.
Absolutely. The EIC Fund recognizes that the founder is the heart and soul of the company.
Right.
And supporting their growth is just as important as supporting the company's growth.
And this mentorship goes beyond just providing advice.
Right.
Right. They also connect the companies with their networks.
Yes.
Opening doors and creating opportunities.
The mentors often introduce the companies to potential investors, partners, and customers, leveraging their own networks to help these companies expand their reach and build valuable relationships.
So it's about creating a supportive ecosystem, a network of individuals who are invested in the company's success and are willing to lend a helping hand.
Precisely. And that's what makes the EIC Fund's approach to mentorship so unique.
Right.
They're not just providing financial capital, they're providing social capital, which can be just as valuable in the early stages of a company's growth.
Okay, so we've talked about mentorship, a crucial element of the EIC fund's support system.
Right.
Now let's shift our focus to another key aspect of their approach.
Okay.
Their commitment to impact.
Mm.
We've established that they're not just chasing profits.
Yeah.
They're looking for investments
Right.
that will make a positive contribution to Europe's economy and society.
That's right. They're not just about creating successful companies.
Right.
They're about creating a better future for Europe.
So it's about using innovation as a force for good,
Uh-huh.
tackling societal challenges, and creating a more prosperous and equitable Europe.
Yeah.
What are some of the specific areas where they're focusing their impact efforts?
They're particularly interested in supporting the development of key enabling technologies like artificial intelligence, biotechnology, and clean energy.
So they're targeting those fields
Yeah.
with the potential to transform industries
Right.
and address some of the most pressing global challenges,
Right.
such as climate change and healthcare.
Exactly. They're looking for companies that are pushing the boundaries of innovation.
Right.
And are creating solutions that will benefit society as a whole.
And this focus on impact is woven into their investment process, right?
Absolutely.
It's not just an afterthought.
No.
It's a core consideration in every decision they make.
They're very deliberate in their approach to impact assessment, considering the potential social, economic, and environmental impact of every investment they make.
So they're not just looking at the bottom line. They're looking at the bigger picture, the long-term consequences of their actions.
Precisely. They understand that investing in innovation isn't just about creating financial value. It's about creating societal value.
Okay, we've covered a lot of ground here.
Yeah.
From the EIC fund's approach to mentorship to their commitment to impact. But there's one more piece of the puzzle I'm curious about.
Okay.
How do these companies actually get the funding?
Okay.
I mean, we've talked about the selection process and the different buckets.
Right.
But what are the practical steps involved?
The process starts with the EIC Accelerator calls for proposals, which are essentially open competitions for funding.
So it's like a talent show for startups, where they have to pitch their ideas and convince the EIC fund that they're worthy of investment.
Yeah.
What happens after a company submits a proposal?
The ISMEA, the European Innovation Council and SMEs Executive Agency, takes center stage at this point. They have a team of experts who carefully evaluate each proposal, assessing the company's technology, market potential, and overall feasibility.
So it's not just the EIC fund making these initial decisions.
Right.
There's a separate agency involved to ensure a fair and objective evaluation process.
The ISMEA plays a crucial role in screening the proposals and identifying the most promising candidates.
Okay, so the ISMEA does the initial screening.
Yeah.
And what happens?
The EU Commission makes the final call.
Okay.
They're the ones who ultimately select the companies that will receive funding and determine the maximum investment amount for each company.
So the EU Commission has the final say.
Right.
But what about the EIC fund?
Yeah.
Where do they come into the picture?
Once the EU Commission has made their selection,
the
ISMEA channels those chosen companies to the EIC fund, which then conducts its own due diligence and investment process.
So there's a handover from the EU Commission and the ISMEA to the EIC fund.
Precisely. And this is where the EIC fund's expertise and flexibility really come into play. They can tailor their approach to each company using a variety of financial instruments and structuring the investment in a way that best suits the company's needs and stage of development.
Okay, so it's a multi-layered process with different players involved. But ultimately, it's the EIC fund that's on the front lines, working directly with companies and guiding them through the investment process.
Yes, they're the ones who are rolling up their sleeves and getting their hands dirty, providing not just funding, but also guidance, mentorship, and access to their network of experts and investors.
It sounds like a very comprehensive and hands-on approach. And it's clear that the EIC fund is playing a crucial role in nurturing the next generation of European innovators.
Absolutely. They're not just writing checks. They're building an ecosystem, a community of innovators who are working together to create a brighter future for Europe.
All right, we're going to pause our deep dive here for now.
Okay.
And pick up the conversation in part 3.
Sounds good.
Where we'll explore some additional aspects of their investment guidelines.
Okay.
Delve into their unique approach to intellectual property management.
Okay.
And discuss the broader implications of their model for the future of European innovation.
I'm looking forward to it. There's still so much to uncover.
Exactly.
About this fascinating and ambitious initiative.
And for you listening, keep those questions coming.
Yeah.
What aspects of the EIC Fund's model resonate with you?
Right.
What questions do you still have? And how do you think this approach could be adapted or replicated to support innovation in other parts of the world?
Keep those thoughts brewing as we continue our exploration.
Welcome back to our deep dive into the EIC Fund.
Yeah.
We've explored their investment philosophy, their focus on deep tech, and their commitment to a European-centric approach.
Right.
Now, I'm curious about the more practical nitty-gritty aspects, specifically how they structure deals and manage their investments.
It's true, the guidelines can get quite technical.
Yeah.
But understanding these details gives us valuable insights into how the EIC Fund operates.
Right.
A key aspect is the range of financial instruments they utilize.
Okay.
It's not just about providing equity.
Yeah.
They have a whole toolbox of options,
Right.
each tailored to a company's specific needs and stage of development.
We touched on this earlier.
Right.
But could you elaborate on these financial instruments?
Of course.
Yeah.
They can use common shares, which are a straightforward ownership stake in the company.
Right.
This gives them a share of the profits and voting rights.
Okay.
Pretty standard in the venture capital world.
Okay, that's familiar.
Yeah.
What other tools do they use?
They also use preferred shares.
Okay.
These are still an equity investment, but often come with certain privileges.
Okay, like what?
Like priority in receiving dividends.
Okay.
Or a larger payout if the company is sold.
So they offer a bit more security and potential upside for the investor.
Exactly.
Okay.
And the EIC Fund strategically utilizes these preferred shares.
Right.
Especially in those early stage investments where they're taking on more risk.
Okay.
It's a way to balance their impact goals with the need for financial prudence.
That makes sense.
Yeah.
Now, what about those convertible instruments we discussed earlier?
Okay.
Could you unpack those a bit further?
Convertible instruments are a fascinating tool.
Okay.
Essentially, they provide a loan that can convert into equity at a later date, usually during a future funding round.
So it's like a loan with the potential to turn into ownership.
Precisely. Yeah. And this is particularly beneficial for those early stage companies, those not quite ready for a traditional equity investment.
Okay.
It allows the EIC Fund to provide funding.
Right.
Without immediately diluting the founder's ownership.
I see it gives the company some breathing room to grow.
Yeah.
Before bringing in other investors.
Exactly.
Right.
And it also gives the EIC Fund flexibility.
Okay.
They can choose to convert the loan into equity if the company performs well, or they can simply collect the interest payments like a traditional loan.
So it's a flexible arrangement that benefits both parties.
Yeah.
Now, shifting gears a bit.
Okay.
We've talked about the EIC Fund's emphasis on monitoring their investments.
Right.
They're not just passively waiting for a return.
No.
But how do they keep tabs on these companies and ensure things are on track?
They typically take a board seat in the companies they invest in. This gives them a direct voice in strategic decisions.
Right.
Their investment officers are also actively involved, attending board meetings, reviewing financial reports, and providing guidance to the management team.
So they're really rolling up their sleeves and getting involved in the companies they support.
Yes, but their involvement is not about micromanaging.
Okay.
It's about providing support.
Right.
Offering advice based on their expertise and helping the companies navigate the inevitable challenges of growth.
It's more like being a mentor or strategic advisor.
Right.
Rather than just a financial overseer.
Exactly.
Okay.
And this hands-on approach aligns with their mission. Remember, they're not just seeking financial returns.
Right.
They're invested in the success of these companies.
Right.
And they want to see them make a real impact on the European economy and society.
Okay, so we've covered how they structure investments.
Right.
And how they monitor those investments. Now let's talk about their approach to intellectual property.
Okay.
We touched on this before.
Yeah.
But I'd like to dig a little deeper.
Okay.
How do they balance the need to support innovation with the need to protect European interests when it comes to intellectual property?
It's a delicate balancing act.
Right.
On one hand,
Yeah.
they want to give the companies autonomy in managing their IP.
Yeah.
They understand that flexibility is key
Right.
for attracting further investment and scaling up.
So they're not trying to stifle innovation by being overly controlling.
Right.
Okay.
But on the other hand, they also want to ensure that Europe benefits from the innovations they're funding.
Of course.
Yeah.
After all, their mandate is to support European innovation and competitiveness.
Exactly.
Yeah.
And that's why they have specific provisions in their investment guidelines related to intellectual property.
Can you give us some examples of these provisions?
For instance, they might require the company to establish its headquarters in Europe or to maintain its research and development activities within Europe.
So they're using their leverage to keep those critical activities within the European ecosystem.
Yes. And they might also negotiate certain rights related to exploiting the IP. For example, they might require the company to grant licenses to other European companies or research institutions.
Right.
Or they might require the company to prioritize commercializing their innovations in the European market.
It's about ensuring that these groundbreaking innovations benefit European businesses and consumers.
Precisely. And they're also mindful of potential national security concerns. So they might restrict the transfer of certain sensitive technologies outside of Europe.
So it's a multifaceted approach.
Yeah.
Balancing the need to support innovation with the need to protect European interests.
Right.
Now, as we wrap up our deep dive, I'm curious to get your overall perspective. What are your final thoughts on the EIC fund model?
It's a bold and innovative approach to supporting innovation in Europe.
They're tackling a persistent challenge.
Yeah.
Bridging the gap between cutting-edge research and thriving businesses. And they're doing it in a very strategic and thoughtful way.
They're not just throwing money at the problem.
No.
They're carefully selecting companies, structuring investments thoughtfully, providing ongoing support, and taking a long-term perspective.
Exactly.
Yeah.
And it's not just about financial returns. It's about fostering innovation that benefits European society as a whole. They're aiming to create a more prosperous, equitable, and sustainable Europe. Using innovation as a driving force.
It's an ambitious goal. And it will be fascinating to see how this model evolves over time and whether it can achieve that delicate balance of financial sustainability and meaningful impact.
Indeed, it's a grand experiment with the potential to shape the future of European innovation.
And for you listening,
we've given you a lot to consider as you reflect on this deep dive. What aspects of the EIC Fund's model stand out to you? What questions do you still have?
And how do you think this approach could be adapted or replicated to support innovation in other parts of the world?
We encourage you to keep exploring these questions and to keep diving deep into the world of innovation and investment.
Absolutely.
This has been a fascinating journey into the inner workings of the EIC Fund. Thank you for joining us on this deep dive.
You're welcome.
We look forward to exploring more intriguing topics with you in future episodes.
Sounds good.
Until then, keep those curious minds engaged and keep seeking knowledge.
And remember, the future of innovation is in our hands.
Absolutely.
Let's shape it wisely